Good day, everybody. Brian here at quantlabsnet.com. Here we're going to do a interesting video demonstration on market regime changes. This is a very important factor so people know when to invest and when not to invest with the regime change, along with maybe the Kelly criterion, managing and throttling your trading account to ensure profitability or not, and to make available your account based upon your historical performance. So here we're using as simulated for demonstration only capabilities here. You can use by sector, by asset class, by whatever you want. And there is source code here, but again, that's behind the paywall I'm about to show you. So essentially, we've got plots here. So here we're mimicking a tech sector volatility with the regime change analysis dashboard. So if you're just purely only in stock, you know what kind of sector you can be in based upon when to trade and when not to trade. So in this case here, it's a regime identification and transition model or signal. So if you have some kind of model that's generating potential when you should trade and can trade in this sector, you can break it down, as I said, any which way you want. This is a tech sector. You can see here along the green, these are the areas you want to be in so that you can trade in and only then, and move into other um, asset classes or sectors that are more profitable than if you're just trading exclusively or whatever in tech sector. Because let's say you're trading in here and you're losing money or you're churning money, there might be other sectors where you could trade and get a better profit. So knowing all these different type of regime changes is kind of critical to maintain and sustain your profit. If you don't do this and only trade in, let's say, tech and not move into something else that's more profitable in this red area, that would be considered an opportunity cost. So in here we have our price, the transition signal, and then this is a signal value because, as you know, during certain times we can generate various mathematical economic conditions to know when uh, whatever signal we're generating is valuable to make it worthwhile to trade in. So in this case, you can see if it's high, and it's not the right regime to trade in for this sector, and then you want a lower signal value that's profitable, and here you could trade in. Shown in another video, different types of strategy. You could do trend following, mean reverting. In this case, as you can see here, based upon the chart, the price line, this is definitely something mean reverting. Same here as well. So we can also look at our post-transitional return analysis. So we have two plots here, the average return 20 days after a regime transition. And a lot of times these regimes will change without you knowing it. That's why you need to generate signals for when to trade and when not to trade. So in this case, we have a regime of 0 and a regime of 1. Go into detail what that is in a minute, where we have a mean daily return, if it's positive or not, and knowing when to trade, when not to trade. In this case, we have a positive one over 20 days based upon that transition. And then there's also, similar to a normalized distribution graph, we have distribution over 20 days by the different regime. And again, it's simulated at 1 or 0. And then most people like to do these extreme tail type analysis and trading exactly in these conditions. That's going to be right there your maximum profit. Over here on this side would be your maximum loss. So knowing this will be kind of helpful. All right, so let's look into what this really is. Let's gotta find the right program here. Yeah, here. All right, 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 here. All Yeah, here we are finding it. So basically, this is a script that's generated via AI as usual. I've got the file share I've opened up late last week. What you're looking for is this zip file. It's a Python file called regime dashboard, and I'll show you the README file associated with it. Okay, um, so what we're doing here is we're simulating the data, synthetic data, based upon what the price regime transition signal. Again, we have to generate that ourselves, and there's different techniques to do that. We collect the data, use feature engineering, kind of ranking, and then again using things like PCA and K-Means as well. So here we're calculating the metrics, computing the metrics needed for plotting the direct line from the simulated data, post-transition returns, along with autocorrelation. That's something your uh, professional portfolio manager will do as well to maximize profit potential. So here we're using two Python packages, Plotly and Dash. And what we're doing here is we're simulating a price series, exhibits shifts in the volatility. And again, it's simulated. So we have here regime 0, 1, assigned roughly in volatility periods. Transition signal is simulated to correlate with the regime change, crossing a threshold near transition. That's generating that uh, value in the signal. So we also can use statistical properties, returns and volatility, simulated regime. It's never perfect, but will aim to directionally represent via the visualization. So goes into details of the different packages. So here we have the different regime shifts, random points, um, and it's adjusting the mean and the volatility slightly to mimic, not perfect. Description of region 0, so region 0, higher mean, lower volatility. Regime 1 is lower mean, higher volatility, calculating a cumulative price series. So out of that, we get a transition signal and the value of it. Roughly allows the regime changes plus some noise designed to cross the signal threshold, which is set at 0.7 near the transition. On and on it goes. Well, I'm not going to go into that. But if you want to know more about this and where to go, there's two things you can do. So again, this is part of my file share. As I said, it's part of behind a paywall. To get access to that, you need to join our Quant Elite programming group, among many other benefits. And if you're not interested in that, you can just go into the Learn tab, and fill out your information, which is never released, and you'll get yourself a free HFT C++ ebook. And then from there, you can learn, grow, whatever, come back and then join any of our groups that we've got. We're going to have two, but the elite programming is pretty well the one that will give you the file share to all the source files that I'm highlighting here. Thanks for watching.